Hi, everyone. Good morning, good afternoon, and good evening to those of you who are joining from outside of North America. My name is Zahara. As a bit of background, after growing up in the family real estate business in Florida, my career has spanned Europe and the US as a hotel real estate investor, asset manager, brand partner, and financial advisor. It is my pleasure and honor to be your facilitator for today's session, Real Estate, Current and Future, Navigating the New Normal. Before we get started, a few housekeeping notes. Please note that all breakout sessions are being recorded, so don't worry if you're torn between a few sessions that are happening at the same time. The recordings will be shared with you post-summit. Also, this is a videos on session, so please get camera ready and turn your videos on. And while you're at it, please check that you are on mute. We have a packed hour planned for this community. The first 30 minutes will be an inspiring and informative talk by Jamal, followed by a Q&A. So please send your questions to me via chat during the session. In the next 30 minutes, we'll do a fun interactive activity to get to know each other, followed by a group discussion. We will also share more about the real estate community that we will continue to build after the IPN Alliance Summit, where attendees can continue to network with each other, collaborate, get career support, knowledge share, get mentorship, and much more. And so with all of that said, I am so excited to introduce you to Jamal. Ali is currently the CEO of Stable Gold Hospitality, a real estate investment company that specializes in affordable accommodation for low and no income residents. What started in 2011 as one rundown and shut down hotel is now a thriving business, which includes approximately $50 million in assets under management, 1,500 rental units, and 150 employees across the US. Stable Gold has been selected as the #1 most innovative urban development company in the world by Fast Company magazine for its innovative approach to affordable housing. Prior to 2011, Ali worked for the Canadian Manufacturers and Exporters, Canada's largest trade and industry association. He has also worked with the Burnaby Board of Trade. Additionally, Ali has an executive MBA from Northeastern University and has earned a certificate from the Stanford Business School Executive Program in Leadership. Ali, over to you.
I was 19 and excited. I was on my way to purchase my brand new electric blue Honda Civic Si. I spent the last 2 years saving $20,000 between college jobs to be able to afford this car. You see, I had a deal with my mom that if I'd saved this money, she would come with me on my 19th birthday and co-sign for me on this loan to purchase this car. So here I am, it's my 19th birthday. I go to my mom's room. Mom, I'm ready to buy the car. Let's go to the dealership. My mom looks at me for a couple seconds. She's like, Ali, there is absolutely no way that I'm going to come with you to that dealership. What you're going to do is take that $20,000, put it as a down payment towards a development, a condo that's going up for sale in downtown Vancouver, and you're going to get into the real estate investing business. What you're not going to do is take that $20,000 and throw it down the drain by putting it into a depreciating asset. I actually got excited for a couple seconds. I said, Mom, does that mean that I can actually get out of the house and get some freedom now? She looked at me again for a couple seconds. She's like, you just don't get it, do you? You're absolutely not going to move into that condo. What you're going to do is stay in that bedroom down the hallway. You're going to start paying me rent. And there's a Dodge Colt downstairs that you're going to start driving. As you can imagine, I wasn't the happiest person in the world, but my mom took me to the development, made me part with my $20,000. And thus I've started my real estate investing journey. 8 years later, I was now sitting on an asset worth over $1 million. What I was not sitting on was a rusted out Honda Civic Si. What that initial story taught me was that it's so much more important to start investing early and looking at where you can actually deploy your capital to start your real estate investing journey at a very early age. I was able to do that, and 8 years later, I'd continued to expand my real estate portfolio. At 27, I had now, after that first investment, developed a decent sized portfolio back in Vancouver. I was sitting on a few single family homes, condos, things of that nature. And I really enjoyed real estate investing at this point. I wanted to look at how I could pivot to doing this full time. But unfortunately, all the revenue I was making from my real estate investments were just going to the bank. They were paying my mortgage. I was building equity, but I was not generating much cash flow. I was looking at other opportunities, and I was having a conversation with my accountant at the time and was trying to figure out how I could get into investing in real estate full time and really become that investor where I didn't have to work a 9 to 5. My accountant told me that she was a silent investor in some assets in a city called Atlanta, Georgia, a city I didn't know much about, but she was doing fairly well. She said that you could essentially acquire a 100-unit apartment complex or a large commercial building for the same price at the time that you could buy a condo for in Vancouver. Obviously, it sounded too good to be true. So she connected me with her broker, and a few weeks later, I'd met him in Atlanta, and he was showing me this exterior corridor hotel, essentially in a city, once again, that I'd never been to. And the hotel was in fairly rough condition, but it was in a lot better of a condition than I had expected. And I thought if we were creative, we could do some interesting things with this. Once again, this was in 2011. We were in the midst of a recession. So most of the hotels in this local area were pretty much sitting empty. There was a hotel right next door, though, that was overflowing. There was tons of traffic. The hotel looked full, and I really was interested to learn why. So I decided to stay at the hotel that night. It was a Studio 6. And when I stayed there, I learned what a brilliant business model they had. They essentially were getting all the benefits of an apartment complex with high occupancy rates, but they didn't have any of the downside risk of evictions because they were under hotel regulations. I thought to myself that if we could acquire the property right across the street at a good barrier of entry at a low price point, we'd be able to make it into a competitive business by just copying their business model. Essentially, that's what we did. We acquired the property within a few weeks. I now moved from Vancouver to Atlanta. I lived in the hotel for a few months to kind of get the hotel up and running. Started with a few staff, and we started a business and tried to get it off the ground. What we found really quickly was that the need for affordable housing was huge. We were already within 60 days sitting at close to 90% occupancy. Of course, our investors in this project were fairly happy, and we were able to continue to expand the business over the next few years. As of today, we currently have 12 locations. We've diversified into a few different parts of real estate investing, some of that being event rentals, some of that being vacation rentals, residential housing. The bread and butter of our business, or the economic engine behind our business, still has been our economy hotel brand. But really over the last 10 years, we've been able to tap into that affordable housing space. And what we found is affordable housing is really a segment that's going to work in any sort of market. Whether you go to the small town in Kansas or the big cities in New York, that need for affordable housing is not only growing, but it's growing exponentially. And so we've been able to ride that wave, and we're looking forward to continuing to ride that wave into the future years. I have three main objectives that I want to go over today with you. The first one is I want to share with you my journey to hopefully inspire you to take action on your real estate investing aspirations. Secondly, I want to share with you my experience on the current market conditions and cycles. And lastly, I want to inform you on future real estate opportunities and how tech will play a role within that landscape. COVID was not in my business plan. 12 months ago, as COVID rampaged across the world, Real estate investors, myself included, were very nervous. Occupancy rates at hotels started to dwindle. Property prices started to take a hit. There was a lot of talk about the eviction moratorium and how that was going to affect real estate investors across the board. People who had multiple multifamily apartment complexes might have been in a situation where they couldn't pay their mortgage, yet they weren't getting any rent coming in. It was a blizzard of issues for a lot of real estate investors. The thought process really was that real estate prices were going to take a hit. Equity investors with large portfolios, their valuations were going to also take a hit, but there was also going to be an opportunity to acquire real estate at very good prices. Well, boy, did everyone get it wrong. Over the last 12 months, property prices continue to increase. The eviction moratorium, yes, did have some issue, did cause some problems for investors. There was a dip in occupancy for the higher end assets on the hotel side. But overall, real estate investors, if you had a decent sized portfolio, you've done very well coming out of COVID. Opportunity investors who we thought were going to do very well, they haven't been able to find the deals that they thought they would. I can tell you from our perspective, we paid less for deals before COVID than we are right now. So the opportunity investor really had not really gained what they wanted to within this last 12 months, but individuals who have had portfolios have done fairly well. Affordable housing was also a huge star over this last 12 months, as many of you have seen. Because of transition, because of a lot of the health concerns, because of a lot of the macro and microeconomic legislation that came through this past year, what you've seen is a huge growth and a need for affordable housing across the country. Valuations of extended stay hotels that gear towards affordable housing have gone through the roof, sometimes multiples of 5 to 10. Another huge winner over this last 12 months was Airbnb. Airbnb had a whole bunch of new uses that wasn't there before. So for example, before COVID, a lot of travelers were utilizing Airbnb just to come and stay for the day or the night, maybe for a week. And it was an alternative to the hospitality segment on the hotel side. But now during COVID over the last 12 months, hospital workers needed to be close to the hospitals. Short-term workers in general needed to be close to their place of work, and they were maybe traveling across the country and needed flexible housing. Domestic travel increased, definitely within the Southeast at least, for people looking for short-term accommodation and just looking to get out. And Airbnb played a vital role with that. So individuals who are investing in Airbnbs have done very well over this last 12 months because of that. Also, individuals who were just sitting on single-family homes converted many of their assets to Airbnbs if they were located in the right place and were able to do fantastic over the last 12 months. Looking into the future and how real estate investing is really going to be impacted by technology, it reminds me a lot about when I first started the business, going back to my first hotel. There was this new platform that everyone was talking about, once again, Airbnb. And essentially, of course, as you guys all know, people were turning single family homes into micro hotels, and they were doing really well with it. I thought to myself, we needed to increase occupancy at the hotel. So why don't we throw ourselves on Airbnb? Why don't we see what we can, what comes out of it? So we put ourselves on Airbnb, and my thought process was that maybe 1 or 2 people would come out of it. I really didn't expect much. Within 48 hours, I had about 20 new customers. As you can imagine, they were not very happy with me because they were showing up to an affordable housing hotel versus the single family home or a bed and breakfast. And so we got kicked off of the Airbnb platform within about 24 hours. However, that forced me to pivot, and we started to utilize other technologies because we saw the benefit of utilizing online technologies to increase occupancy, even on the affordable housing side. We pivoted to Craigslist, we pivoted to Facebook Marketplace, etc. There was a few different things that we started to do. And those technologies have really helped us increase our occupancy over the last few years and keep it over and above 80%. What I learned out of that scenario is that just jumping into a technology and learning it is very important because you'll learn from your mistakes. You'll be able to pivot from those mistakes, latch onto the technology that works for your specific business, and implement it within your strategy. Looking at all the new technologies coming down the line, whether it's Cadre, whether it's Realty Mogul, whether it's Fundrise, there's almost a new technology every day on the real estate investing side that we can tap into. I would encourage new investors or even seasoned investors to tap into these technologies, if not for the value that those technologies bring, but tap into it so you can learn from your mistakes, pivot accordingly, and implement it into your real estate investing strategy. Lastly, one of the things that we're seeing a lot of, especially on the hotel side, is the use of robots and automation within hospitality and real estate investing. A few months ago, I went to go look at a portfolio of vacation rentals in Orlando. I was walking this portfolio of residential homes, and what I realized really quickly is I was not meeting any humans here. There were only robots in these homes walking me through the home. There was a screen on the robot, and I was interacting with the broker, but it was through this robot. What implications is that going to have for the real estate investing industry and brokerages as we go into the future? These technologies are going to enable us to scale our business, not only if you're a real estate broker, but also if you're investing out of state and maybe even maybe within your country, maybe internationally. These technologies are going to be a huge component of helping us scale our real estate investing businesses over time. I can definitely speak from experience in terms of the hotel side. We've been able to scale the business utilizing technologies through cameras, through software, et cetera, that's really delved into our organization and helped us manage assets across the country without having to be there in person. Additionally, what is the hospitality workforce going to look like with automation and robots coming into place? Some parts of the world are already utilizing this aggressively, and we're already seeing 2 to 5% of hospitality jobs globally taken over by robots and new technology. They're saying that within the next 5 years, that's going to look like 25%. How are hotel investors going to manage that? How are you going to manage these technologies? How are you going to implement these technologies within your strategy? These are all new questions that we're going to have to start asking. Looking at our own business, for example, it might not make, depending on the technology, it might not be a fit. If we put a robot at one of our front desks on the affordable housing side, that robot might get dismantled within 24 hours. So it really just depends on what your real estate investing strategy is, where you're investing in real estate, and if those technologies match what your goals are at the end of the day. At the beginning of this talk, I made 3 promises to you. Number 1, it was to give you some insight on my real estate investing journey, hopefully to help you and guide you on some of the things that you might have questions with in terms of real estate investing and either getting started or growing your portfolio. Secondly, I want to give you some insight on current market trends and what we're seeing in the real estate investing industry. And lastly, I want to give you some thoughts on the future of real estate investing and how technology is going to impact that. I hope that I've been able to fulfill those promises and you guys have gotten that information. I will leave you with the final quote, which is, "Successful investing is about managing risk, not avoiding it," by Benjamin Graham. If you have any questions, we'll look forward to hearing from him. Thank you.
Thank you, Ali. That was super insightful. I know I took away a lot of notes and valuable insights that I look forward to incorporating and further researching. We've had a few questions come through, and so I'm just trying to, so the first one I had prepared for you, and you answered it better than I thought you might be able to, because it was over 10 years ago that you first got started. And so it was very helpful to hear the concrete steps you took, both physically and mentally, to find your first asset, raise the capital, renovate it, and most importantly, I think sometimes is to mentally shift from being an employee to managing capital and investments. So thank you for that. One question we had was, how do you think about investing in real estate directly versus using a REIT or websites like fundrise.com?
Yeah, I think if you have the time and ability to invest in it directly, that's obviously the ideal way to go. And the reason I say that is it gives you a learning opportunity, right? When you're managing it directly, you learn a lot more about the asset that you've acquired. Now, not all of us can do that, obviously. If you want to keep your full-time job, or if real estate investing really is something that you're doing on the side, then those technologies really make a great thing for you to be able to capitalize on, to still get exposure to that component of investing without you having to get hands-on. I think, of course, as well, just looking at it from a financial standpoint, when you are investing in these assets directly, you're not having to pay out the commissions and the brokerage fees and all the other kind of things that are added in and padded into a lot of those technologies. So it really just depends on you personally, where you're at from a real estate investing perspective and what your goals are at the end of the day.
Great. And looking at it from a, well, let's just say real estate pricing is hot right now. So what tips do you have for someone who wants to enter the market, be it residential or commercial?
I would say anyone who wants to enter the market should do so. You just look at the value add opportunities based on the space that you're in. So I think people who are, I get this question quite often in terms of timing the market. And the reality is, whether it's stocks, whether it's real estate, none of us can time the market. None of us have that, crystal ball to be able to do that. And so really, you just got to work from where you're planted, right? And where we're planted is in a situation where there's a lot of inflationary pressures. It's increased pricing, but you don't know what could happen within the next 3 to 5 years. Pricing could keep going up. So if you lose opportunities in the short term because you're waiting on some great opportunity for there to be a dip in the market, I think you might lose opportunities. So what we did at Stable Gold is we pivoted and started to look at opportunities across the country versus the locations we were in, so we could still find good deals, just it might not have been very close to home. So we started finding deals in North Dakota, for example, where no one else wanted to be. And even in a hot market, it's still going to be a value add opportunity because you just don't have a lot of competition for deals. So I think you just got to look at those various opportunities and can be consistent. I think the biggest thing with investing is consistency, not so much getting it right in terms of timing the market. If you're consistent, your snowball will develop over time. I hope that answers your question.
And what tips do you have for raising capital for investments that maybe isn't the sexy thing right now, that no one really wants, but you see the opportunity? Like when you went after that first asset targeting low-income housing, how did you convince investors to get behind you? How did you convince lenders to get behind you?
It was a really interesting scenario on our first property. So of course, based on, as you guys heard my story, my pitch to investors was, hey guys, I have no hotel experience. I've never managed any assets over 4 units. Would you want to give me $1 million? And as you can imagine, I had a lot of hangups, especially from family, from friends. And my first investor, my mom came to the rescue again, right? And she was my first investor, and she put in a couple $100,000, and I had other family members help out. And so I think we look for the low-hanging fruit initially, until you can, of course, showcase that you can manage these type of assets. So I was really blessed and lucky to have family members that were willing to support my first venture. And then from there, once we got it up and running, we took it to the next level. But I think, one of the other things I would say is having family members as investors can essentially be a really big blessing for you as an initial real estate investor and operator. And the reason being is because there's a lot more pressure on you to perform, right? Like none of us on this call want to lose our family's money. We want to maximize it to as much as possible. And so, that pressure was on me for our first hotel. And we were able to really utilize that pressure to our advantage over time and make sure that our investors were taken care of. So I think look for low-hanging fruit. And then, once you get that low-hanging fruit, really kind of focus on helping them, reach their goals financially as well. But I will say, going back with regards to, pitching my investors who were not family members, I had to call a lot of people, at least 200 or 300 people. So it's not easy, especially for your first few investments.
Great, thank you. And for those in our audience who are thinking of going the corporate or professional route post-pandemic, where do you see the opportunities in terms of asset classes, geographies, demand to really build your experience and your reputation and your know-how? And where would you advise not focusing on?
That's a good question. I would say affordable housing, as I mentioned in the talk, I think is gonna continue to grow, right? And we look at the reasons why. Obviously, there's another Delta variant coming into the market. There's so many things happening globally, and they'll continue to be cyclically that will increase the pressures for the need of affordable housing. There's been a lot of stimulus printed over the last year. I don't know how long that's going to last. I don't think any of us know that, but that's going to play a major role in the need for affordable housing. So I'd say any sort of jobs or opportunities or investments in that space is going to do really well. Places to stay away from, I don't have a specific space. I would say one of the areas that I personally have stayed away from is the luxury market, especially on the hotel side. And I just feel that it's very cyclical. If you looked at over the last 12 months, as we talked about, luxury hotels took a major hit, not to their own fault, of course, but because international travel was really canceled, you have no control of trying to fill your hotels, obviously. And so that type of uncontrol is not something that I like as an investor. I like consistency. And I know on the affordable housing segment, I'll consistently have between 80 and 95% occupancy. And even though my equity returns or even my cash flow might not be as great as maybe on the luxury blends, it's consistent. And so I'd say that would be, the area I would probably pivot away from.
Yeah, I think that's a good point. I would also add, unless you're like me and you like solving thorny problems and restructuring messes, certain areas of retail are going to have a long road to recovery ahead. And thinking about what retail will look like in the future would be especially valuable if that's an asset class that really excites you. Well, thank you so much, Ali. I know that this has been personally very useful and valuable for me. Thank you for your presentation, for your mom's thoughts, and the story about her and how she pushed you into what has turned into a very successful career path for you.